just to keep it clear, these questions are as is. We have received from the participants, so there might be some typos, but so the first question is, if I would like to include technical indicators such as RSI, ADX using Talib package as an additional input feature, should I use fractionally difference close price or the raw close price in order to derive the value of the indicators, right? So to answer this question, I would say that you should always use the raw close price, or better still, use the adjusted close price when you are calculating any sort of technical indicator value. The fractionally difference close price is used when you are trying to make a series stationary and so on. But the indicators like RSI, stochastic oscillator, and so on, they are range bound within usually 0 to 100 or -50 to +50. So they already have some sort of stationary nature, which uh, which is inherent after you use the raw close price or the adjusted close price. So you need not use the fractionally difference close for any sort of technical indicator calculation. Now, one thing I would like to mention here is when I said that you can use adjusted close price as a better alternative to the raw close price, that is when usually for equities, you might have seen that there are corporate actions, right? There might be some sort of dividend grant or some sort of share split, or in rare cases some shares are grouped together in a particular share ratio. So just to give you an example, in the third quarter of 2020, Apple announced a 4-to-1 share split. I think it was 5-to-1, but the idea is that suddenly you have 4 shares for every single share of Apple which you previously owned. What this does to the price is that it is divided in the ratio by the share split. Like if it was a 4-to-1 ratio, the price, uh, uh, if it was a 4-for-1 share split, the price will be automatically reduced by 4 times when the stock opens for trading the next business day. Your entire capital remains the same, but if you look at the raw close price, suddenly you see a drop in of around uh, like 1/4 or 1/5 of the share price. This drop is artificial. If you don't have the information that any sort of share split was done, then you might think that something really bad happened to this particular stock, and suddenly it lost 75-80% of its stock price. To account for these corporate actions, most of the data providers, they provide price data along with the raw price. They provide the adjusted close. So adjusted close keeps the latest price as it is, and uh, going back in the past, they try to adjust the data as per the industry standard norms. Like if there's a share split or if there's a dividend ratio, they accordingly adjust those prices. So wherever available, you should use the adjusted close price for any sort of analysis or back testing in your strategies.